Hi everyone, welcome back. Yesterday I uploaded a video telling you about how to or when to is best to dig into your RRSPs, and I got lots of feedback, lots of emails and messages asking me uh, a lot of them asking about questions about taxation. What about taxation? And others suggesting that I should have on the website on pensionbooster.ca calculator for taxation. And the reason why I don't have the calculator about taxation is because it's not impossible, because I don't think nothing is impossible in this life, but it's highly complex. This is the reason why there is not uh, tax income tax calculators for after age 65. And this is what I'm going to share with you today, the complexities of after age 65. And even before age 65, there are plenty of income tax calculators online. And if you open two or three browsers, and I have done this, and you run two or three different calculators, but the same question, the same income tax in the same province, you will get different answers. And this is not because they're wrong. This is because of the tax credits, because different calculators assume different number of tax credits in different ways. And this is what it makes it complex. So I will tell you everything about tax credits, or as much as I can about tax credits, and you will realize why it's not possible. However, I will try to do my best to show you, to share with you how you can estimate the cost of taxes when you withdraw money from your RRSPs before age 65 while you are working. But before doing that, I'd like to share this video from the marketplace in the on the CBC that they were posted today, and they told me all about it. They sent me an email telling me about this video, so I want to share it with you. Let me show you what it is. This is the video that CBC posted today in YouTube, and this is the marketplace. I'm sure most of you are familiar with this show, the marketplace. It shows hidden cameras reveal how big banks are upselling you. It talks about when you go to the big banks, to the TD, to the BMO, CIBC, and how they try to upsell you, how to they try to sell you whatever, mutual funds, RRSPs, and normally financial products that you may need, you may not need. There's nothing wrong with selling you what you need, but it is absolutely wrong to sell people or to convince people to buy products that they don't need, or to give the wrong information. This is what the CBC has done in this video. Fantastic job, really informative. I recommend you to watch this video. Don't worry about the link. I will include the link below my video on the description. So being said that, let me jump into taxation, what I want to tell you. This is tax tips. I'm going to go back one step. This is the website that I find the easiest to check how much income tax you need to pay on your RRSP withdrawals if you make a withdrawal before age 65. After age 65, it changes, and we will touch on that as well. But let me show you this first. So this is before age 65, and every province, depending on the province or territory that you live, the taxation changes. It's different. So let's check Alberta for just to pick on a province, and lower this advertising here. This is the taxable income for 2024, and here you have taxable income for 2023. Let's see taxable income 2024. On the first $55,867 that you earn in 2024, yeah, and if you live in Alberta, you will pay 25%. But wait a minute, 25% of 55,000? Probably not, because we all know that we don't pay tax, or give or take, on the first 15,000. But it's not that the first 15,000 is non-taxable. It's that you have a tax credit equal to the tax payable, or almost around the tax payable, for $15,000. That's all it happens. Okay, so that's why is we assume that we don't pay tax on the $15,000. So your tax liability is 25% of the whole 55,000. Then you get a tax credit equal to 25% of 15,000, which is a discount. This is called a non-refundable tax credit. There's two types of tax credit, non-refundables and refundable. Refundable tax credits are very few. It's just like the GST that the government is going to send it to you every month or every 3 months, whatever, when you do your income tax. So that's a refundable tax credit. The government pays it to you even if you don't pay income tax. The non-refundable tax credit doesn't do anything for you if you don't have income, if you don't pay income tax. If you have to pay income tax, then it gets discounted from the tax payable that you have. That's all it does. So that's a non-refundable tax credit. So that's what it is. So in this case, for example, if you live in Alberta, you are under the age of 65, and you earn $55,867, exactly that in 2024. And on top of that, you will withdraw $10,000 from your RRSPs. How much is it going to cost you, that $10,000? Well, that's going to be over and above this amount, which means it's going to be into the next stage between 55,867 and 111,733. So that amount, this bracket here, the amount in between these two numbers, it pays 30.5%. So your $10,000 withdrawal from an RSP in this case will cost you $3,050, or 30.5% of the $10,000. And that's how it works. If you go back and we go to another province, say, let's take BC, for example, in BC is different, see? So we go to 2024 in BC, and then the first 47,937, and then from 47,000 to 55,000, another bracket at 20%, at 22%, and every province is different. So you have to come into your own province, go use the tax tips, which is the easiest. There is more about taxation. I'm not going to get into it now because it's not applicable to what we're talking about today. But this is what I find that is the easiest. And in every province, pay attention what it says at the bottom here, right here, because it is telling you about the dividends or about whatever tax credits or extra taxes, surtaxes that they didn't include here. For example, if you go to the province of Ontario, they show you here and they tell you that the marginal tax rates do not include the Ontario Health Premium, which increases the above marginal tax rate by about 25%. But the 25%, not this amount. The 25% is on the Ontario amount. This amount includes the federal amount, which is 15%, and the Ontario amount, which is 5.05%. And that's what increases. So you have to pay attention to that in order to have an accurate number. And but even if you don't, this is very little difference. So you will get a very accurate number when it comes to an RRSP withdrawal. So being said that, let me show you now what happens with your taxation after the year in which you turn age 65. You are probably familiar with this form. This form is a CRA, a Canada Revenue Agency form. It's called TD1, and it's the form that you complete when you change jobs, when you're going to start working for a new employer, or if your circumstances in life changes and your employer knows that they may ask you to complete this form again. What is this form for? So, well, here you enter your information, your personal information, and then the tax credits. Remember the basic personal amount, the first 15,000, give or take, we don't pay tax, it's non-taxable. No, it is taxable. Here is what happened. Number one, basic personal amount. How much is in 2024? $15,705. Okay, but this is you're going to get a credit equal to the tax payable for the first $15,705 as long as you earn less than $173,205. If you earn more than that, this 15,000, this credit start decreasing at 15 cents per dollar, or 15%. okay, of the amount over 173,000. That's the reason why it's a tax credit that is based on your income. Of course, yeah, most people do not earn $173,000 per year, but there is a lot of people that they do. So this is an important tax credit at age 65 or after. Then number two, you get the caregiver amount for infant children under the age of 18. Most people over 65 don't have kids under the age of 18. If you do, uh, so you may have another tax credit equal to $2,616, or the tax payable equal to the tax payable for $2,616. That's what it is. So, and then the age amount. This is an important tax credit because as long as you earn less than $44,325 after age 65. So if you will be age 65 or older on December 31st of 2024, on December 31st of the year in practice, okay, and your net income for the year from all sources, all your income, will be less than 44,325, then you have another credit for the amount of tax payable on $8,790 of income. So here you have $15,000 of income, which technically you don't pay income tax. Here you have another $8,790 of income, in which technically you don't pay tax as long as you earn less than 44,325. If you earn more than this, then you start losing this at 15 cents per dollar. And if you earn more than 102,925, well, this will be all gone. Okay, so this is an important tax credit for your tax planning because this is when you want to split income with your spouse when you are at retirement. Say one spouse split has higher income than the other. That's my case. My wife worked most of her life for the government. She has a rich pension plan. I'm the poor guy. She makes more money than me. But now when we are retired, she splits her pension income and the income tax with me. Technically, don't tell anybody, she doesn't give me any money, but she split it on the income tax with me, so we pay a little bit less income tax. So be careful with that because you can split pension, but not all pensions. Canada Pension Plan is not splittable. If you want to split Canada Pension Plan with your spouse, you need to complete a form called Pension Sharing at Canada Pension Plan, and that's the only way to split Canada Pension Plan. You cannot split it at tax time, but that's what you can do. So you can split part of your pension, anything that employer pension, RIF, not an RRSP because it's not a pension, but a RIF is, you can split with your spouse and lower your taxation. And also qualify for the pension income amount, which is another important tax credit. This is another $2,000. So if you earn less than 44,325, then you will have 15,705 and the tax credit for that amount, which makes it basically non-taxable. Another 8,790, which makes it non-taxable, and another $2,000 here because of the pension income amount that it makes it non-taxable. In total, you get give or take $26,500 that they're non-taxable as long as you earn your income is lower than 44,325. So, which is not bad because you get $26,000 one spouse, $26,000 the other spouse. You can get 52,000 bucks per year. So, and you won't be paying any income tax. Under that scenario. And this is the reason why after age 65, taxation gets more complex, more advantageous, but more complex as well. If you have questions about this, you can contact me at any time. Just give me drop me an email, give me a call, whatever, and I try to clarify your questions. There are other the tax credits after that, like tuition, the disability amount. If you have a disability, you have more money that it becomes non-taxable, or again, you get a tax credit to offset the tax payable for that amount. But these are less common tax credits. And this is from the form that you complete while you're working. You don't need to complete this when you are retired. So this is for your employer while you're working. But when you are retired, you don't have to complete that form anymore. Anyway, I hope I didn't confuse you too much. I know this is highly confusing, highly complex. It's not my fault, guys. Blame it on the government, which is easier. And I promise I'm going to keep on trying. I'm going to keep on working on my Excel, trying to figure it out um, create an income tax calculator after retirement. I'm trying and I keep on failing, but I failed quite a few times when I tried to run the pension calculators that I have on pensionbooster.ca. Especially when I tried to calculate the guaranteed income supplement. And one day I succeeded. So you never know. I probably succeed in the future with an income tax calculator as well. Up until then, thank you for watching. Don't forget to subscribe to the channel. It's going to help me a lot. Give me the thumbs up if you can. It takes only a click and it helps me. And I'll see you soon. I'll see you in the next video. Bye.